When you think about the hottest corners of the stock market right now, your mind probably goes to AI, semiconductors, or maybe Bitcoin miners. But over the last few weeks, a surprising new theme has been emerging: housing stocks. In particular, we've seen an explosion of retail chatter around LoanDepot, ticker symbol LDI, with Reddit mentions spiking and daily trading volumes climbing. And what's fascinating is that this story isn't isolated. It mirrors the renewed attention that another housing-linked name, Opendoor Technologies, ticker Open, has been receiving. So today we're going to dig into LoanDepot. Why is it suddenly the subject of Reddit chatter and even bullish research reports? How does its story connect to Opendoor, another stock that's been in the spotlight thanks to retail enthusiasm? And most importantly, could housing be setting up as the next big retail trade, a sector rotation of sorts, after AI, EVs, and other trend-driven plays of the last couple of years? Let's break it down. The immediate spark for all of this was Citron Research. For those who might not follow them closely, Citron is one of the most famous short-selling outfits of the last 20 years. They've targeted companies like Valiant, Shopify, and even Tesla back in the day. But in recent years, Citron has shifted toward also publishing long theses, and their latest bullish pick is LoanDepot. Citron's case is pretty straightforward but powerful. They argue that LoanDepot's servicing business is worth more than the company's current market cap. Specifically, they value the servicing portfolio at roughly $5.50 per share, compared to where the stock was trading before their note came out. That's a striking claim, and it immediately got people talking. For context, LoanDepot is one of the largest non-bank mortgage lenders in the US. They originate loans, but more importantly, they service them, meaning they collect payments, manage escrow, and handle the administrative side of mortgages. This servicing portfolio has become the centerpiece of the bullish thesis because it generates recurring cash flows, and in Citron's view, the market hasn't properly recognized its value. Now, when Citron calls a stock undervalued, it's bound to grab attention. And that's exactly what happened here. Social media lit up, Reddit chatter spiked, and LDI suddenly became a trending ticker. The bullish story doesn't stop at servicing. LoanDepot's recent Q2 2025 earnings added more fuel. The company reported higher revenues, improved margins, and most importantly, a narrowing of its net loss. They're not profitable yet, but they are moving in the right direction. The balance sheet also looks stronger, with $409 million in cash on hand at the end of the quarter. In today's environment, where access to liquidity is crucial, that's a reassuring figure. Investors also like the tone from leadership. Anthony C., the company's founder, is back as permanent CEO, bringing stability and renewed strategic direction. So when you combine the Citron report with better-than-expected earnings momentum, you get the foundation for why LDI is suddenly buzzing across Reddit and FinTwit. Now let's connect this to Opendoor Technologies, ticker Open. While the businesses are very different, LoanDepot is about lending and servicing mortgages, and Opendoor is about iBuying homes directly. The market narratives rhyme in some interesting ways. Both companies are in the housing ecosystem. Both have been left for dead at various points in the last couple of years, written off as unprofitable or unsustainable. And both are now seeing renewed interest because influential voices are stepping up with a more bullish case. For Opendoor, that voice has been Eric Jackson, a well-known investor and media personality who has been pounding the table for months. He's been vocal on CNBC, he's been writing open letters to management, and he's kept the stock in the retail conversation. The result? Opendoor has seen multiple rallies this year, with retail sentiment helping keep it in play. For LoanDepot, that role is being played by Citron Research. Different messenger, similar outcome. Suddenly, retail traders have a new housing stock to rally around. This raises a bigger question. Are we seeing the birth of a new theme? Could housing stocks, whether mortgage lenders like LoanDepot or iBuyers like Opendoor, become the next sector trade for retail investors? Think back to the cycles we've seen. In 2020, it was the original meme stocks like GameStop and AMC. In 2021 and 2022, EVs and clean energy names caught fire. Over the last year, AI has dominated, with Nvidia and Palantir riding that wave. More recently, Bitcoin miners and other crypto plays have surged alongside digital assets. Retail is always looking for the next narrative. And housing makes sense as the next chapter for a few reasons. First, it's relatable. Everyone has an opinion on mortgages, on home prices, on affordability. It's a theme that hits home, literally. Second, the macro backdrop is shifting. If interest rates begin to stabilize or even fall in 2026, that creates upside for both originators like LDI and transaction-driven players like Opendoor. Investors see this as a contrarian way to position for rate cuts. Third, there's an underdog element. These stocks are beaten down, overlooked, and heavily shorted. That's the perfect recipe for retail excitement, especially if there's a credible catalyst like Citron's valuation call or Jackson's advocacy. Now, I want to stress, optimism here has to be measured. Neither LoanDepot nor Opendoor are out of the woods. For LoanDepot, the risks are obvious. They're still losing money, and the business is very sensitive to interest rates. If mortgage rates stay elevated, origination volume stays low, and servicing alone might not carry the whole story. For Opendoor, execution is everything. They've proven the iBuyer model can scale, but profitability remains elusive. A wrong bet on housing markets could set them back quickly. That said, what makes both stories compelling is the potential asymmetry. The downside is visible. Investors can see the risks. But the upside, if things break right, is enormous. And that's exactly what retail traders are drawn to, names that could be worth multiples more if the catalysts play out. So, what's happening here feels bigger than just one stock. LDI's chatter isn't random. Opendoor's retail buzz isn't isolated. Together, they point to housing as a space where retail is starting to focus. And that's important because retail attention itself is a catalyst. When thousands of traders start posting, buying, and hyping a ticker, it creates liquidity, it draws in institutional eyes, and it feeds into momentum. We've seen this time and again. For LDI specifically, the combination of undervaluation on servicing, improving financials, leadership stability, and social media buzz gives it a strong case to remain in the conversation. For Opendoor, the narrative remains about being the disruptor, the high-risk, high-reward innovator in real estate transactions. And if both of these names continue to trend, we may look back and say September 2025 was the moment when housing became the next retail trade. To wrap up, here's how I see it. LoanDepot, ticker LDI, is in the spotlight because Citron Research put a bullish valuation target on its servicing business, and because the company's own financials are starting to trend in the right direction. Reddit and retail investors have picked up on that, and chatter is accelerating. At the same time, Opendoor, ticker Open, continues to be a favorite among retail traders, thanks to vocal advocates and its unique position in housing. Together, these two names might be showing us something important, that retail is starting to rotate into housing as the next big narrative trade. It's still early, it's still risky, but if history has taught us anything, when retail finds a theme that resonates, the upside can be dramatic. So the big question isn't just whether LDI is undervalued, or whether Opendoor can prove out its model. The real question is whether housing stocks as a group are about to become the next chapter in the retail investor playbook. If they are, then LoanDepot might not just be another stock with a bullish report. It could be the leader of the next retail-driven wave. And for those of us watching closely, that's a story worth paying attention to.